Imagine you own like a mid-sized construction company, and you just landed the absolute biggest commercial contract of your life.
Oh, the dream scenario.
Right. It is the project that's going to finally put your firm on the map. You're popping champagne with your team. But hidden away in paragraph 14 of your commercial liability insurance renewal.
Which is probably a 40-page PDF.
Exactly. A massive document that you barely skimmed and signed yesterday. There's this tiny, almost incomprehensible legal clause in there, and that clause states that coverage is totally voided if you're working on a structure over 3 stories tall.
Wow.
And this new project, it's 4 stories. So one accident on this site will completely bankrupt you, and your insurance broker, well, they never even mentioned it.
Because they didn't actually read the contract either. You
Yeah.
know, they just, they sent you the renewal link, checked the box, and collected their commission. And it happens every single day in the business world. People think they're protected, but they're actually operating completely exposed because they treat risk management as this like administrative chore rather than a core business strategy.
And that is the nightmare scenario we are unpacking today. Welcome to the deep dive. For this one, we're looking at a single, frankly fascinating profile on the Magoon Group. They're an independent insurance brokerage out in Denver, Colorado.
Yeah, it's a really interesting case study.
It really is. I mean, insurance usually sounds like the most boring topic imaginable for you listening right now, but I promise we're going to flip that assumption on its head. The mission today is to explore how this firm is taking what might be the most historically stagnant check-the-box industry on the planet and turning it into a proactive, strategic tool for growth.
Which is completely opposite to how we usually think about it.
Exactly. We're going to look under the hood at the actual mechanics of how they do this. So, okay, let's unpack this. And I think we need to start with why the traditional model is so fundamentally broken.
Yeah, well, the root of the problem is really the commodity mindset. I mean, for the last 20 years, the industry has trained business owners and regular individuals to view insurance exactly like buying printer paper.
Or paper clips.
Right. You assume the product is identical no matter where you go. So your only metric for success is finding the lowest possible price. You get 3 quotes, you pick the cheapest one, and you just move on.
Because it's a grudge purchase.
Yeah.
You're only buying it because the law or your bank or maybe your landlord is forcing you to. Nobody wakes up excited to buy liability coverage.
No, nobody. And that breeds a culture of ghosting on the agency side.
Ghosting, like in dating.
Pretty much. The traditional broker competes frantically on price to win your business. They secure the policy, they get their commission check, and then they vanish. You literally don't hear a word from them for 11 months. Meanwhile, your business is evolving. You're buying new equipment, you're hiring new people, maybe launching new services. So by the time that broker magically reappears a year later for your renewal, your actual operations look completely different from the piece of paper they sold you.
So you're left with these massive blind spots. It's kind of like buying a fire extinguisher at the hardware store, right? You buy it, you shove it under your kitchen sink, and you basically ignore it for 5 years.
Yeah, you just assume it's going to work when you need it.
Exactly. But you never check the pressure gauge. And you didn't realize it was only rated for wood fires when you actually have a grease fire on your stove. So, I mean, what if the person selling you the extinguisher actually walked through your house and helped you fireproof the walls instead?
That is a critical distinction.
Okay.
And it goes even deeper than that when we look at commercial policies. Because buying that fire extinguisher without understanding its chemical makeup, that's structural risk.
Right.
When a broker just sells you a document and disappears, they aren't giving you protection. They're giving you a receipt.
A receipt, yeah.
The true product a business owner actually thinks they're buying is peace of mind. But you cannot have peace of mind if your advisor is purely reactive, just waiting for the smoke alarm to go off before they do their job.
Which means the traditional broker is essentially just a middleman processing paperwork, not an actual advisor.
Exactly. They're an order taker. And that is the exact dynamic the Magoon Group is attempting to tear down. They serve a highly complex client base. We're talking entrepreneurs, high net worth families, restaurants, country clubs.
Construction firms, property restoration businesses.
Right. These are operations with massive moving parts. You cannot treat a property restoration business, a company dealing with like mold, asbestos, and structural damage with a copy and paste lowest bidder mentality.
Hold on, let me stop you there, because the Magoon Group's core philosophy, as outlined in our source material, is that risk management should create opportunity. Honestly, that sounds great on a motivational poster in a corporate boardroom, but practically speaking, risk is liability. If I'm expanding my restaurant, I want less risk, not a new way to embrace it. So, how does paying attention to an insurance policy actually help me open a second location or create a new opportunity?
It comes down to the mechanics of calculated risk. I mean, in business, growth and risk are permanently tethered together. You literally cannot innovate or expand without taking on new exposure.
Sure, that makes sense.
The goal of a real advisor isn't to eliminate risk entirely, because doing so would mean paralyzing the business. You wouldn't do anything. The goal is to map the terrain so clearly that you can run faster than your competitors.
So it's the difference between walking through a dark room with your arms out just hoping you don't hit the coffee table versus actually turning the lights on.
That's a perfect way to put it. Let's look at your restaurant expansion example to see how this works mechanically. Say you want to launch a massive off-site catering division.
Okay, sounds profitable.
Right. But a traditional broker just asks, what's your projected revenue? And then sells you a generic liability policy. They just check the box. But the Magoon Group approaches it operationally. They sit down and actually analyze your supply chain. They look at the fact that you are now transporting perishable food across town in commercial vehicles.
Which introduces completely new failure points.
Massive failure points.
Yeah.
What happens if the refrigeration unit on your delivery truck fails in traffic and $10,000 worth of high-end seafood spoils right before a massive corporate event?
Oh, that's a disaster.
Right. And a standard, cheap commercial policy often contains a tiny exclusion for off-premises food spoilage.
Wait, really?
Yeah, the traditional broker missed it because they were just looking for the cheapest premium to win your business.
So the restaurant owner thinks they're covered, but they're actually walking a tightrope without a net.
And when they finally discover that the net is missing, it's usually after the seafood has already spoiled and the client is suing them. This is where an obscure insurance endorsement acts like a load-bearing wall in a house.
A load-bearing wall. I like that.
Yeah, you look at a 40-page contract, and it's just a sea of text to most people. But if you remove one specific sentence, like that obscure endorsement covering transit spoilage, the entire structural integrity of your liability protection just collapses the moment stress is applied.
That makes total sense. By identifying that load-bearing wall beforehand, Magoon secures the right endorsement. They turn the lights on in that dark room. And once the restaurant owner knows that specific failure point is financially protected, they can aggressively scale that catering business without hesitation.
Exactly.
They don't have to hold back cash reserves just in case. They can deploy that capital into marketing or hiring more staff.
That is exactly how managing the downside mechanically unlocks the upside. You know, you're no longer buying a shield to hide behind, you're hiring a scout to help you navigate the terrain ahead. But to be that scout, you have to speak the language of the terrain. The insurance industry is notorious for hiding behind its own technical jargon. Brokers love to talk about deductibles, sublimits, indemnity clauses, policy forms.
The stuff that puts a business owner to sleep by paragraph 2.
Totally, because it isn't the business owner's language. Magoon translates these complex contractual issues into plain English focused entirely on operations. They don't call a client to discuss the minutiae of an endorsement clause.
Right.
They call to say, hey, we noticed you started renting heavy excavators for your new project. Let's talk about how the rental contracts shift the liability onto your balance sheet. It moves the conversation away from compliance and entirely into strategy.
But I mean, there is a serious math problem here.
What do you mean?
Well, if these advisors are spending hours walking through a client's restaurant kitchen to spot hazards or carefully analyzing the supply chain of a construction firm, how are they not drowning in the sheer volume of paperwork required to actually process the policies? Because reading a 40-page commercial contract takes hours.
Right.
That level of bespoke operational service usually destroys an agency's profit margins. How do they actually afford to do this?
Well, they don't, unless they fundamentally change how the work gets done. And that is where the Magoon Group's operational model gets genuinely fascinating. They invest heavily in artificial intelligence and automation.
Wait, AI? Reading legal contracts? Because normally when we hear about AI entering an old-school legacy industry, the headline is always about massive layoffs. It's about private equity coming in, deploying software, firing half the staff, and making the service way worse for the client.
Yeah, that is the standard cost-cutting playbook. But Magoon is using the technology for capacity building, not cost-cutting.
Okay.
They're using AI to solve the exact math problem you just brought up. I mean, the traditional broker doesn't ghost their client for 11 months because they're lazy.
They don't.
No. They ghost the client because they're buried under an absolute avalanche of administrative data entry.
Oh, I see. So they use AI to dig themselves out. How does that actually work under the hood? What is the AI doing?
It acts as an analytical co-pilot. So let's go back to that massive 40-page PDF renewal document. A human broker used to have to manually read this year's policy, put it side by side with last year's policy, and line by line search for any subtle changes the carrier might have sneaked into the text.
That sounds agonizing.
It is. Did the underwriter quietly add a new exclusion for water damage? Did they change the sublimit on cyber liability from $1 million to $500,000?
Finding a needle in a haystack of legal jargon.
Exactly. Now, Magoon utilizes large language models and specialized software to ingest those documents instantly. The AI compares the two contracts and highlights every single discrepancy in seconds.
Wow.
Yeah, it flags the exclusionary language. It automates the compliance checks. What used to take a highly paid advisor 4 hours of mind-numbing reading now takes 4 seconds of automated processing.
Here's where it gets really interesting because it makes me think of a commercial airline pilot. When you board a cross-country flight, the pilot isn't physically holding the yoke, making tiny micro adjustments to the flaps for 5 straight hours.
Right, they put it on autopilot.
Exactly. They put the plane on autopilot for the mundane cruising altitude. The computer handles the predictable, repetitive data streams. And that is what allows the pilot to preserve their mental energy and focus all of their expertise on navigating the unexpected turbulence, monitoring the complex systems, and actually making the high-stakes human decisions.
That's a brilliant analogy. The AI is maintaining the cruising altitude. The paradox here is that by automating the robotic analytical tasks, the technology actually makes the professional relationship more human.
Right.
Because the advisor isn't spending their Tuesday manually formatting a PDF spreadsheet. They're spending their Tuesday walking a client's property line to spot a fire hazard the client missed.
It fundamentally flips the broker's daily schedule. If you buy back 30 hours a week of administrative time, you can redeploy those 30 hours into earning trust.
And you earn trust through consistent, valuable interactions. Not a flashy once-a-year sales presentation, but a continuous dialogue. The advisors at Magoon are trained to think like business owners themselves. Because the AI handles the friction of the transaction, the human advisor have the bandwidth to act like a long-term strategic partner.
They actually have the time to care.
Exactly. They're continually searching for new ways to help clients make smarter decisions all year round.
Which brings us to the ultimate endgame of this entire philosophy. We talked about how traditional brokers just want to close the sale. But according to the profile, Magoon's primary metric for success has nothing to do with selling a policy.
No, selling the policy is just the byproduct of their actual goal. Their goal is to become the first phone call.
The first phone call.
Yeah. They want to be the very first person a client reaches out to when facing any important business decision, regardless of whether it explicitly involves insurance or not.
Okay, so what does that actually look like for a business owner? To have an insurance broker functioning at that level of trust?
Think about the relationship a business owner has with a truly elite CPA.
Okay.
You don't just call a great accountant on April 14th to frantically file your taxes. You call them in October and say, hey, I'm looking at acquiring a smaller competitor. How is this going to affect our cash flow? What are the tax implications of structuring the buyout this way?
Right, they're a sounding board for your entire financial strategy.
Exactly.
Yep.
And Magoon wants to occupy that exact same space, but for operational risk. If a property restoration company is thinking about taking on a new category of hazardous material cleanup, Magoon wants to be that sounding board.
They want the client asking, how does this change our risk profile?
Yes. Are we taking on liabilities that outpace the profit margins of this new service?
It elevates the broker from just a vendor to an outsourced chief risk officer.
And it changes the fundamental value of what they're protecting. Because when an advisor understands a business that intimately, they aren't just protecting a brick-and-mortar building or a fleet of trucks.
What are they protecting?
They're protecting the owner's life's work. They're protecting the employee's ability to pay their mortgages. They're protecting the legacy of what that entrepreneur spent decades building.
Protecting livelihoods.
Yep.
It really is a massive paradigm shift. I mean, we started this deep dive talking about the dread of that annual renewal envelope, that feeling of buying a pure commodity, getting a fire extinguisher shoved under the sink, and dealing with an industry that basically relies on you not reading the fine print.
And we've seen the mechanics of how the Magoon Group totally dismantles that. They shift the entire model from transactional paperwork to operational relationships. They compete on intelligence rather than price, using plain English to reveal those load-bearing walls in a contract.
And ironically, they leverage advanced AI to buy back the time they need to be intensely human.
Yeah.
They let the computers read the fine print so the advisors can become that coveted first phone call, a genuine partner actively shielding the livelihoods of the people they serve.
It really forces us to look at the broader implications for how we run our own lives and businesses. I mean, we all have those vendors we treat as necessary evils.
For sure.
If a historically stagnant, check-the-box industry like insurance can be completely revolutionized just by shifting from a reactive compliance mindset to a proactive, strategic one, what other areas are we neglecting? What other boring overhead expenses are hiding massive strategic potential?
That is the perfect question to leave on. Look at your own grudge purchases, your software subscriptions, your legal retainers, your accountants. Are you allowing them to just collect a fee and ghost you until renewal time? Or are you demanding that they act as strategic partners? Because maybe it's time we all stopped just shoving our fire extinguishers under the sink and started asking our vendors to help us fireproof the house instead.